watching the latest news from financialmirror.tv. Many stock markets recovered on Thursday, and winners during the recent turmoil, such as the yen and gold, slipped as at least temporary calm returned to markets a day after coordinated global interest rate cuts. European and emerging market shares were higher due to gains in Asia, while demand for government bonds, gold and low-yielding currencies fell. The direction of the moves was the mirror of what happened on Wednesday and earlier in the week, but nowhere near matched the degree. Thursday's relative calm followed an unprecedented display of international coordination on Wednesday, when the US Federal Reserve and central banks from Europe, Canada and China executed emergency rate cuts in the face of the worst financial crisis in 80 years. Japan's Nikkei closed down, finishing 0.5% lower in a choppy session and down for a sixth straight day for its lowest close since June 2003. Spot gold was down 2% at $888 an ounce, having gained around 8.5% earlier in the week. Japan's yen fell and the dollar rose from a 6-month low. The euro also recovered against the yen after falling to a 3-year low on Wednesday. France, Belgium and Luxembourg will guarantee new financing by Dexia in an attempt to bolster an earlier rescue bid and restore confidence in the banking group. Dexia shares on Euronext rose 28% to nearly €6.5 in early trade after the deal was announced. The overnight talks came after shares in the cross-border municipal lender and retail bank continued to dive despite an earlier €6.4 billion rescue by the three governments. Dexia's situation is complicated by the fact that it's largely in the hands of public bodies, including Belgium's 3 regions and local authorities. Belgium said it would provide 60.5% of the guarantee, France 36.5% and Luxembourg 3%. Dexia lost half of its market value over the last 2 weeks, including a 15% drop on Wednesday, after Standard & Poor's downgraded its core entities on Tuesday for the second time in a week, saying it may also cut the AAA rating of Dexia's FSA subsidiary in the US, burdened with toxic investments. Shell-shocked Iceland took control of its biggest bank, Kaupthing, on Thursday to try to shore up a teetering banking system. The state has now seized control of 3 of the major banks after Landsbanki and Glitnir were taken over, while Iceland's Prime Minister has warned of the risk of national bankruptcy as it failed to prop up its battered currency. Iceland epitomised the global credit boom 15 months ago when its banks expanded dramatically overseas. Investors took large positions in its high-yielding currency and foreign money poured into local projects. Banking assets amounted to about 9 times its gross domestic product, and its current account deficit has billowed to 16% of GDP last year. The government said it had not asked for help from the IMF, but assistance was definitely an option, and separate negotiations to secure a $5.5 billion loan from Russia will begin next Tuesday. British house prices fell at their sharpest annual rate for at least 25 years in September as the credit crunch continued to take its toll on the housing market. HBOS said its Halifax house price index fell 1.3%, taking prices down 12.4% in the quarter compared with a year ago, the sharpest fall since 1983. Analysts said that although the Bank of England's emergency half percentage point cut in borrowing costs on Wednesday would provide some relief to homeowners, house prices still had further to fall as lending conditions were still tight. September's fall was the smallest in 7 months, taking the average house price down to £172,108, and economists reckon prices have still further to fall. Oil edged up towards $90 on Thursday after a steep slide this week in response to expectations that demand will fall sharply if the global economy slides into recession. The sharp fall in prices to the lowest level in 10 months has prompted OPEC to consider holding talks to review output. Venezuelan President Hugo Chavez said that OPEC is calling for an extraordinary meeting, and some members of the cartel said the group should meet in November. Analysts said much will ride on the world's biggest producer, Saudi Arabia, and whether the kingdom will agree to restrain its massive production. A much larger than expected rise in crude and gasoline inventories in the US last week provided evidence that demand is slowing as the credit crisis starts to affect the wider economy. Low-cost airline EasyJet expects the industry to face a very tough consumer environment next year. Its chief executive, Andy Harrison, said carriers will face higher fuel costs as the US dollar strengthens against the euro, and airlines which do not hold enough cash to foot the bill will not survive. Nonetheless, EasyJet had no plans to cancel orders for new planes it's placed with Airbus, as it still aimed to grow and increase its number of planes to 200 by the year 2011. In the upcoming winter season, airlines are expected to cut the number of seats they sell by 8 to 10%, though that figure could rise as more airlines go out of business. Moody's issue a pair of reports on Thursday, a stable outlook for the European drinks industry and a negative outlook for European retailers based on weaker performance. The outlook for the European beverage industry is stable as companies sparked revenue growth through price increases, cut costs and hedged where possible against the rising cost of commodities. Recent mergers, joint ventures and acquisitions have further reshaped the competitive landscape. The prices of aluminium, sugar and barley have increased in the past year, continuing to put pressure on margins. Furthermore, softening economic conditions in the US, where many of the rated companies have a substantial presence, as well as in European markets, have reduced consumer spending, holding back volume growth. Moody's believes that emerging markets will continue to increase their contribution to volume and revenue growth. Thank you for watching FinancialMirror.tv.